Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of Tesla analysis. Today we will continue with Tesla, but we will also add Shopify and Amazon in the end of the video. Tomorrow is Friday, the last trading day of the week, and I think that might be an opportunity for a day trade given the breakout in Amazon today and a potential breakout in Shopify tomorrow. If not a day trade, then at least a swing trade depending on how chart pattern pans out. If you're new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Without further ado, let's get right into it. So we will begin with Dave Leaf's tweet on Elon's cumulative shares that he sold. As of November 16, he sold another 934,000 shares, and cumulatively he has sold 8.7 million shares. He also simultaneously exercised new shares, and you can see here, and to date he has exercised over 6.3 million shares. So the last 2 days, the 16 and the 15 Tesla shares moved up, despite the fact that Elon sold almost 1 million shares. He also exercised over 2 million shares each day, so that probably contributed to getting Tesla in the green. I don't really want to speculate too much on Elon's activities in relation to the stock price, A, because it is short term, and B, he does not single-handedly control the total volume in Tesla anyway. He represents a decent portion, but not a whole lot. So he is less than 10% of Tesla volume on a daily basis. The average 30 days volume in Tesla is 30 million shares, and he has been moving between 2 to 3 million shares per day. So it's important to look at the big picture here and not just hone in on what Elon is doing, because it does not necessarily control everything related to Tesla. The daily chart here looks like Tesla has a bullish continuation candle today. It is an inside bar compared to yesterday, so for all intents and purposes today is still very bullish, even though the candle is red. Tesla ended today just shy of $1,100. The actual price at closing was $1,096, so that is pretty impressive. If you look at the resistance, the next resistance is 1114, and Tesla blew past that yesterday at the high point of the day. The next resistance is 1145 and then 1189. Then you would get to somewhere around 1214 and then 1242, which would be the all-time high in Tesla. Looking at the hourly chart here today, the high point of the pivot point would have been 1153, but Tesla never got there. It got to one of the resistance at 1114, first minute in the morning, and then start retracing back. It also hit the one of the support level 1078 and bounced right there. It never really moved to the bottom pivot point either. So because the move is a little bit more narrow today, the pivot points for tomorrow on the upper end is 1131, the middle pivot point is 1094, and the bottom pivot point is 1077. Either way, Friday could easily be a consolidation day before we see the next move. So over the last few days, you can see the Tesla broke out, but then today is just a simple consolidation day for that matter. The volume does not look entirely promising. Once again, 69%. It is not super amazing either, and I don't think that there's a whole lot of activities by Elon today, but we shall find out in the next couple of days. Let me also take a look at the 30-minute chart here. So on 30-minute chart, we see the buy volume came in at 1077 or $1,077, supporting Tesla all the way up to 1101. So for tomorrow, the bottom pivot point also coincide with the low point of today. So I do think that if Tesla gaps down in the morning, it could easily touch the bottom pivot point and then start spiking back up. But if Tesla gaps up, chances are it would close the gap, touch the middle pivot point and then continue to spike back up. Overall trend tomorrow, I see bullish continuation, but I do think that it does need to sort out the first few minutes in the morning before deciding on a direction. Hopefully it will be spiking up all the way to the top pivot point here, but I foresee a consolidation around the middle pivot point of 1096 as well. So is it time to enter any kind of day trade or swing trade? At this point, I don't see yet a major opportunity. I'd like to see Tesla consolidate once again tomorrow with another inside bar that ends somewhere in the $1,100 range, because that would make an ascending triangle, and then I would have every reason to believe that Monday could be a good day for the bulls. If Tesla ends the day around 1100 tomorrow, I probably could enter a call option for next week, but once again, we are looking at high volatility. If Tesla does not have volatility on Monday or Tuesday, that option could be substantially deflated in terms of premiums. So I have to wait for a good optimal point to enter. If Tesla closes at around 1114, I think that would be a strong indicator of a potential bullish for next week. In the medium to long term, I do think that Tesla will get back to 1243, which was the all-time high, no problem there, especially leading into Q4 delivery. We are still far away. We still have another month and a half to go before we get to the end of December with delivery result, but I do think that Tesla could use the next few weeks to shake out all of Elon's share selling news, and then heading into December, it could potentially spike up, and we'll revisit a potential call option at that point. But as of right now, I don't yet see an immediate opportunity. Keep in mind that Tesla has a gap that it needs to fill. So the last time it dropped off with Elon's share selling announcement, it closed the week before at 1222, and it started the week after at 1162. So you got a $60 gap here that I'm hoping that Tesla will eventually fill. So in other words, when Tesla get to above 1145, I think chances are it will fill the gap and get all the way up to 1222. As far as a day trade in Tesla, I still look at the gap. If there is a substantial gap, i.e. $20 or so, I think that's a good opportunity to jump in. For example, this morning, Tesla also have about $15 gap on the upside. It did certainly fill the gap and then eventually move sideways and then move down further. So I think that it is very important to look at a substantial gap in the morning in order to play the gap. If you are into a day trade, I don't really see Tesla running a whole lot tomorrow given the pivot points, but Tesla is one of the stocks that doesn't necessarily conform with the pivot points, so anything could happen. For me, for a day trade, I will just focus on the gap. If Tesla ends the day and the week around 1114, then I would consider a potential call option to swing into next week, but the expiration of that call option would have to be a couple of weeks out, 2 to 3 weeks out to be exact, in order to give me enough comfort to hold through the weekend. Let's talk about Amazon. Amazon had a really good day today. It moved up substantially, up over 4%, and hit 3,700 at some point. At the height of the day, it was 3,704. The volume is over 100% at 180%, and definitely predominantly buy volume. The RSI is a little bit concerning, so it's possible that tomorrow morning it would retrace a little bit before going back up. So that would be a really good opportunity to enter a call option to swing until next week if Amazon retrace a little bit in the morning. Ideally, it should retrace back down to another $20 from here. So 36.80 or even 36.70. I think that's still pretty safe to enter a call option there. There's nothing to prevent Amazon to reverse, but based on what I've seen between the buy volume, the overall volume, I don't foresee Amazon reversed, and I would probably take a call option when Amazon get to about 36.70 or so, if it does get there. Given the candle and the price action today, it could very well gap up in the morning and continue to go up. The all-time high for Amazon right now is $37.72, so that is only about $72 from here. So keep that in mind. Amazon has filled the gap that was created from earnings from a while back. So back in July, it had a earning gap dropping from 3,600 down to about 3,347. It has been consolidating around there, but as of today, it has effectively filled the gap. Actually, the gap was filled on November 10th, and then it retraced big time, consolidate a little bit as expected, and then continue to go back up, and then fill the gap again, but even go above and beyond the gap. Right now, Amazon does not have any more gap, but it should aim to hit all-time high at 37.73. So that is what I'm looking for. It could hit tomorrow, or it could be the day after tomorrow. On the weekly chart that I share over and over again, Amazon has a weekly bull flag, and it is breaking out right now. The weekly bull flag is reflected in my beige lines here. You can see this is the body of the flag. This is the flagpole. The first price target is $39.50, and the second price target is $45.51. So I think Amazon is well on its way to hit first all-time high at $37.72, and then the next thing it will get to is $39.50. It could very well hit within the next week or so. If we're lucky, it could even break all-time high tomorrow and get to the 3,800 in the morning. So that is something to look forward to. If you are interested in swinging Amazon, I think if Amazon retrace a little bit in the morning, that is an optimal point to enter a call option to swing. And by swinging, I mean you probably want a few weeks out, or at least until the end of next week. I wouldn't do a day trade on this because you don't know if tomorrow is consolidation day. If it is a consolidation day, then you probably lose all of your premium. So I wouldn't do same day expiration for Amazon tomorrow. It is entirely possible that it could happen, but it is just not my risk tolerance. So I would consider entering a call option when it moved back a little bit and then go back up. If Amazon gaps up in the morning, let's say it gaps up to about 37.15 or above that, chances are it will hit all-time high and retrace a little bit and or going all the way up. So if Amazon gaps up, you could probably wait to see if it could fill the gap. When it filled the gap, premium for call options would be deflated, and that could also be an optimal point to enter a call option. If it doesn't retrace, you can't be waiting for retracement. So you have to wait for the next best opportunity, which is a gap up first and then filling that gap by moving down, and then you can enter a call option there. So that would be something I'm looking to do tomorrow. For Amazon, I look much longer horizon. So an hourly chart doesn't really tell me a whole lot, but you can see that here it has been consolidating for the last few days with very huge reversal on Monday, but then consolidating just sideways for the last few days, and today was the breakout date. The volume's pretty impressive today as well, so this is not a fake out as far as I'm concerned, and I do think that it could get to all-time high tomorrow or the day after. The trading range for tomorrow on the upper end is 37.96. So if it does hit the pivot point at 37.96, that would beat all-time high. Once again, all-time high is 37.73. The middle pivot point is 36.53. So this is important. If Amazon get to 36.53 tomorrow, that is an excellent, not just optimal, but excellent opportunity to enter a call option. The bottom pivot point is 36.03. Of course, there's always a chance that Amazon reverse, but once again, based on volume, based on the price action, I don't think that is more likely. I think the more probable scenario would be either a gap up or a flat opening and move all the way up to all-time high at 37.73. Here's the chart for Shopify. Shopify is cooking to break out once again. So last Friday, it broke out big time. And given the price action for this week, it looks to me that it has been consolidating for another imminent breakout. And the breakout could happen tomorrow or it could be next week. So far, The lowest price point was $16.29, which is not even half of the candle that it made on Friday last week. So for all intents and purposes, Shopify is very bullish. The volume today was only 92%, so it's not crazy, but the candle pattern is definitely bullish. The RSI has been retracing a little bit, but it's not too significant, so I wouldn't say this is divergence just yet. So far, I still look at this as a bullish pattern. The hourly chart will show that the upper pivot point, 1732, which would be an all-time high. The middle pivot point is 1672, which is not too far from here, and the bottom pivot point is 1646. For strategy for tomorrow, I would look to see if Shopify gaps up or gaps down. If it gaps down, I would immediately take a call option for it to at least close the gap and potentially surpass that to get to the upper pivot point. But I wouldn't be too ambitious with my trade. It would probably take profit right around 1700 or 1714 at the highest. I wouldn't wait all the way until 1732, although it certainly could get there. The second possibility is that Shopify gaps up, and by that I mean if it closed the day today at 1681, it could open at 1700, creating a $20 gap. You could also play that $20 gap, or the better option would be to wait for Shopify to somewhat close the gap or attempt to close the gap and then take a call option. So my green line here is where Shopify closes today. So I would like to see Shopify to get further down if it does gap up, to move back down closer to the green line before I take a call option to about 1714. Once again, even though the pivot point is 1732, and it is entirely possible that Shopify can run and get there or even further than that, I would take profit right around 1714, unless you have call options that last until next week. In that case, you can let it run a little bit. But if we are lucky, tomorrow could be a big running day for Shopify, just like last Friday. Shopify tends to be a multi-day runner, so I do believe that tomorrow represents a really good opportunity for Shopify to run. If I'm looking at next week call option for expiration November 26th, keep in mind that we have Thanksgiving next week, so you might not want to keep the option until next Friday anyway, but the play would be to see if Shopify runs Friday and or potentially Monday as well. So if you're looking at strike price at around 1710 or 1715, which is previous all-time high, the premium right now is around $3,000. If Shopify gaps down in the morning, this premium could get to about $2,200-$2,300, which would be an excellent opportunity for the bulls to enter call options. If Shopify gaps up, then of course this premium is going to be higher, but I would wait for it to retrace back to get back to about 3,100 or so before entering. So it depends on the circumstances tomorrow. If you are aggressive, you could buy a call option for 1725, 1730, which is the pivot point here, or even further out to 1,800, which Shopify is entirely capable of in a single day if we're lucky. But that is a really high risk trade because it's lower premium here, but you could potentially lose a lot of it if Shopify doesn't run tomorrow. So it depends on your risk appetite there. But if Shopify does run, you could potentially get hundreds and hundreds, if not 1,000% return on this call option here. So that is my 2 cents for the 3 favorite stock to trade: Amazon, Shopify, and Tesla tomorrow. Good luck to all of us, and hopefully I'll see you in the next video. Thank you very much. Bye.